The Nigerian Senate has urged the federal government to pay outstanding fuel subsidy arrears to oil marketers to avoid the proposed strike action. The Red Chamber also urged oil marketers in the country to rescind its decision to embark on a nationwide strike due to unpaid subsidy arrears amounting to 1 trillion naira. The Major Oil Marketers Association of Nigeria, Depot and Petroleum Products Marketers Association, and Independent Petroleum Products Importers had on November 30th threatened to disrupt fuel supply nationwide if the federal government failed to clear the 800 billion naira debt it owed them within 7 days. According to the marketers, at the expiration of the ultimatum, they will cease operations and withdraw their employers from all the depots across the country. In a motion at Thursday's plenary, Chairman Senate Committee on Downstream Kabiru Marafa said there is an urgent need to avert looming crisis in fuel supply due to non-payment of accrued subsidy arrears to oil marketers.
Aware that worried that the action of the marketers, if not checked, may result into artificial fuel scarcity that may span through the election period. More worried that the attendant consequences will impact negatively on Nigerian masses by default. Also worried that the continuous delay in the payment of the arrears has increased the debt profile from 429 billion. This was the amount that was agreed with the marketers and the executive branch when the then acting president summoned a meeting of CBN, Ministry of Finance, and all the players.
The lawmaker noted that the strike, if hatched, may lead to artificial fuel scarcity, which may span through the election period. In his contribution, Senate Majority Leader Senator Ahmed Lawan, who blamed the situation on the previous government, alleged that those who are laying claim to the subsidy are allies of the previous government.
That the following bills were passed by the Senate and the House of Representatives and were transmitted to the Clerk, National Assembly for onward transmission to the Presidency in C for assent. The bills are 1. Nigerian Aeronautical Search and Rescue Bill 2018 HB 139. 2. Climate Change Establishment etc. Bill 2018 HB 1020. 3. Chartered Institute of Pension Practitioners of Nigeria Establishment etc. Bill 2018. The Senate is aware that a technical committee of the Senate, House of Representatives, and Director of Legal Services met and worked out on the clauses. Relying on Order 1B and 53.6 of Standing Order of the Senate Standing Order, the Senate accordingly resolves to rescind its decision on the affected clauses of the bills as passed and recommit same to the Committee of the Whole for the consideration and passage.
Other senators in their contributions also alleged that those within the present government are those sabotaging it, saying the issue has gone beyond National Assembly's input.
Authorities of this country, it has gone through the Ministry of Finance, it has gone through the Federal Executive Council, it has gone through this very responsible National Assembly. Committees finished it and we passed it here. I don't know what authority you need to release these funds so that there should be peace, and allow business to develop in this country. Therefore, Mr. President, I think that, we should try as a Senate to investigate and find out who are the elements who are giving this government bad advice to withhold this payment. Because it's something which is about 400 and something billion, Mr. President. If we had paid it at that time, it would not even have amounted to 500 billion. Now it's reaching 1 trillion. Now, holding this one, say, into next year, is sabotage, not just to this government, but to the people of Nigeria. So I urge, Mr. President, that this Senate should put its weight and responsibility behind and urging the government to immediately, within the next 2 weeks, pay this matter off and reach an amicable solution so that this country is not put into unnecessary crisis.
The situation is very simple. These are issues that were treated and dealt with by the National Assembly since June, and up till now, nothing has been done. as the executive, there is no question of sabotage, Mr. President. If there is any element of sabotage, it is the government itself that is sabotaging itself. Because the situation is, the issue of how this matter should be settled rests with those people that are in control of our finances in the executive arm of government. So the situation is such that now this motion that came into being actually came at the right time, because the marketers actually are frustrated. Our committee also frustrated because some agencies of government actually did not want to cooperate with the committee, and so that this matter can be put to rest once and for all.
And his duty doesn't fall under the purview of the National Assembly in this respect. So is it the DMO that is stopping this payment, or the Central Bank that is stopping the payment, or the Ministry of Finance that is stopping this payment? All these three bodies do not answer to National Assembly, other than the fact that as it pertains to approval of appropriation, we have duties over them. But regarding implementation of the law we pass and any other policy government has instituted, is the duty of the executive. Insofar as this matter relates to the general public, and that those are the people we are here to represent, we will support those aspects that are going to affect them. i.e., if anybody is attempting to strangulate this nation on the basis of supply of petroleum products, we should immediately act on that basis.
What we should be thinking now is, how do we mitigate, how do we engage proactively and abate the looming crisis that is facing us, which is the Christmas festivities and the national elections. Mr. President, there were so many allegations here and counter allegations, especially as to the PIGO. When this administration comes, nobody can even establish how much is the subsidy amount owed. So it involves a meticulous work to establish that. And when that was done, a figure of 429 billion was reached. This amount that Senator Volker, the leader, the minority leader, is talking about of 1 trillion, maybe he doesn't get the motion very well. The amount still remain 429 billion. But the claimants, that is the subsidy, the owners of these monies, are saying that because of the interest rate they are paying, now it's likely that the figure is going to be 1 trillion. So you can't say, you can't compare what was there as the total debt and what the claims of this owners of this money is. So let's be very clear here. And my own concern here is that let us face what is what is important here, which is how to abate the looming crisis.
In his remark, Deputy President of the Senate, Senator Ike Ekweremadu, urged the federal government to engage marketers and agree on outstanding liabilities to put an end to these subsidy claims. And
essentially, I think the summary is that government should be able to keep to its agreement with people, not just the oil marketers, but once we reach an agreement, that agreement has to be kept, and everybody should be able to honor the agreement. More importantly is that the oil marketers and all those that are being owed now are employers of so many Nigerians. And if these were not paid, then the jobs of those Nigerians are put in jeopardy. And of course, the banks that gave them money may not be in the position to give money to other sectors or other people. So the implication is quite huge for us as a country. So I join the rest of you in saying that government needs to honor this obligation and make sure that these monies will be paid such that we'll have sufficient fair supply, especially as we go into the Christmas, the New Year, and the elections. And I do hope that we don't need to overflog this matter, that a word they say is enough for the wise.
To this end, the upper chamber advised the federal government to direct all concerned agencies to immediately pay the subsidy arrears as approved by the Federal Executive Council and passed by the National Assembly.